Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Titan Pharmaceuticals, and let's just say it seems like they're making a lot of stock available, maybe a little too much. Stick around and we'll see if this giant stock sale is a brilliant move or a bit of a red flag for investors. Sidus, we are going to break it all down for you. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. This is a Form 8K, which is a current report companies file with the Securities and Exchange Commission, or SEC, to announce major events. Think of it as an or Attaboy moment for investors. This one is from Titan Pharmaceuticals, dated May 30th, 2025. Titan Pharmaceuticals Inc. is a company with offices in New York that focuses on developing treatments for chronic diseases. The report highlights events that happened as early as May 30, 2025. So what big news did they have to share? The main event here is about unregistered sales of equity securities. In simpler terms, they're talking about issuing new shares of stock without going through the usual registration process with the SEC. This usually happens through what is called exemptions. Scroll conversion of Series AA preferred stocks growth. Let's tackle the conversion of Series AA preferred stock. On May 13, 2025, a company called the Psy Group Limited wanted to convert 139,882 shares of their Series AA preferred stock into common stock. As a result, Titan Pharmaceuticals issued Psy Group Form 587 shares of common stock on May 30, 2025. These shares came with a restriction, basically saying Psy Group can't just immediately sell them off. Back in September of 2023, Titan Pharmaceuticals made a deal to sell 950,000 shares of Series A preferred stock to Psy Group at $10 per share, totaling $9,500,000. The agreement lets Psy Group convert those preferred shares into common stock at any time. Each preferred share converts into common stock based on a set formula. It takes the value of the preferred share and divides it by an initial price of $0.466. This conversion rate can change based on certain events. There's a limit. Psy Group can't end up owning more than 19.99% of Titan's common stock, or the maximum allowed by NASDAQ without getting shareholder approval first. This is a common clause to prevent one entity from taking over the company without everyone's consent. Scroll conversion of Series B preferred stock scroll. Next up, we have the conversion of Series B preferred stock. Blue Harbor Asset Management LLCFC decided to convert 79,773 shares of their Series B preferred stock into common stock. Again, on May 30, 2025, Titan Pharmaceuticals issued Blue Harbor 265,913 shares of common stock. Like the previous case, these shares have restrictions on when they can be sold. Similar to the Psy Group deal, Titan Pharmaceuticals had a securities purchase agreement with Blue Harbor from March of 2025. Blue Harbor bought 100,000 shares of Series B preferred stock at $10 each for a total of $1,000. These preferred shares can also be converted into common stock at any time. The conversion rate is based on dividing the value of the preferred share by an initial price of $3.00. This rate is also subject to adjustments. Just like with Psy Group, Blue Harbor is limited to owning no more than 19.99% of Titan's common stock, or the maximum allowed by NASDAQ without getting approval from shareholders. The last part of the form just lists the exhibits, like the interactive data file. This is more of a formality for regulatory filings. Now, what does all of this mean for Titan Pharmaceuticals' Captain? On the one hand, issuing these shares brings in much needed cash. Saved on the other hand, it dilutes the value of existing shares. Think of it like slicing a pizza. The more slices you make, the smaller each slice gets. When a company issues more stock, each existing share represents a smaller piece of the company's ownership. It's important to note that both Psy Group and Blue Harbor are limited in how much common stock they can acquire. This is likely to prevent any single entity from gaining too much control without shareholder consent. The risk here is that if the company doesn't use the money wisely, the increased number of shares could lower the stock price, hurting existing investors. Also, if the market perceives these conversions negatively, it could create downward pressure on the stock. Overall, this move appears to be a calculated risk for Titan Pharmaceuticals. They're bringing in funds but also increasing the number of outstanding shares. Whether this works out depends on how well they can use these funds to grow the company and increase profitability. Alright, that's our breakdown of Titan Pharmaceuticals' latest filing. What's your take on these conversions and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.